how to approach investing. It's literally taking them back to school, back to the basics of investing. And two very, very special guests, need no introduction. Anybody who's into the investing world knows Nilesh Shah and Raamdeo Agarwal, and both of them are here with me at the campus of SP Jain Institute of Management Studies and Research at Andheri. Nilesh, Raamdeo, thank you so much for joining in. Raamdeo, let's... All right, thank you. Sure. So, Raamdeo, this has been what, the fourth year that we've been doing this show together. We're traveling to Andheri, and does the enthusiasm still remain the same of going back to school and talking to students about investing?
This is probably the first event where I reached on time. that shows the enthusiasm. So it's always a pleasure to come to school, and particularly SP Jain, where I've stayed for some time, where I was doing my chartered accountancy. So this campus is known to me, and of course the school is very famous. So it will be really, I want to really see how much the student minds have developed in terms of asking questions about the markets.
Oops, you're putting them under a bit of stress, I'm sure, Nilesh. This is, well, it may not be your alma mater, but you, I'm sure, come here. Your wife, I believe, used to teach at SP Jain as well. So in a manner of speaking, it's coming back to some place that even you know quite well.
Absolutely.
And
there's a temple in the campus which I have visited many a times. I don't know if all of you have visited it or not. If not, do go and visit. It's really good.
Okay, what about investing, Nilesh? You know, when I was in B school, yes, typically what we used to learn in the finance module in a B school was not so much about ROC, ROE, a basic PE, and then, you know, the normal jargon that we hear. And I'm sure that has increased now because of the increased internet penetration as well. If you were to be teaching at a B school right now, but practical teaching, what would you be telling students to, you know, the 2 or 3 things that they should keep an eye out for if they're approaching investing?
So one, you have to make investment. It's extremely important if you want to be independent from a money point of view. All of us have been told as a kid, money is not everything in life. That's complete bullshit. Make sure that you have made enough money before you make such statement. Number 2, equity investment is a real shortcut of making money, becoming wealthy. And either you can do equity trading or you can do equity investment. My recommendation is to go for equity investment. That's a far sure way of making money, compounding your wealth, creating wealth compared to trading. In investment, it's about promoter, and it's about price which you pay to get the equity. So go with good promoters and try to pay a reasonable price where you have a safety of margin. If you can do these 2 simple things, a good promoter and a reasonable price, and then give time, I'm sure all of you will retire quite wealthy.
Okay, I'm sure it's not as simple as that. And for a lot of you who thought that you know, the fancy world of derivatives, taking puts, calls, futures, options is a sure shot way to making money, Raamdeo just told me something before we entered. Raamdeo, maybe you say that. For people who want a $100,000 job, that's a great thing. Yeah. But
if you want a few $1 million job, then you get to investing. You know, if you want $100,000 job, then do derivatives, and you'll always remain at $100,000 job. But if you want to graduate, you'll start again in investing from $100,000 job, and to go to few $1 million, and actually to create an institution which could be a few $1 trillion. And I understand what I'm saying. Few $1 trillion. That's where the investing starts.
So Raamdeo, what would you tell them? I mean, what would you tell students right now if you were to be a teacher who's trying to teach them the few facets that they should look at?
Yeah. So I think what Nilesh said is a good starting point. But I think more seriously, fundamentally, one has to understand the difference between value and price. I mean, once you get to the real world of your books and all, then a lot of people, they don't understand difference between value and price. Value is what you get, price is what you pay. And people spend 90%, 99% time on understanding the behavior of price. You must spend 90% time in understanding underlying value. Price is there, everybody knows. In the market, if there are a million people, all million people by the nanoseconds know the prices. And there is not even 0.01% who know the underlying value. It is very important to understand underlying value. Market is one place where a rupee thing can be sold for 10 rupees and 10 rupee thing can be bought for a rupee. You must understand what is the underlying value, and that's the game. The guy who understands the value and stands by the conviction that this is the value I think and this is the gap between the value and the price, and hence I will buy or sell and stand by that conviction, he wins. It's a two fight between the practitioner and the market.
So that's a lot for somebody who's starting out his career in investing, right? So, I mean, would you believe that, and then of course the students, when I was a B school student, I always used to get these questions that there are people who are value investors, there are people who are growth investors, and then I'm confused as to what do I want to be, because there are those growth investors who say that, oh, value investing doesn't work in a growth scenario, and there are value investors who say that, growth investing will always lead to downfalls if the market corrects. So, as a student, I was very confused about what do I want to become.
So, at the end of the day, there is only two kinds of investors. One, a successful investor. Other, you know it. A value without growth has no meaning. A growth without value also has no meaning. A pure value investor also sometimes ends up making growth investment. A pure growth investor also at the back of his mind keeps value in mind. So don't compartmentalize yourself. You just try to go into compounding of investment. Albert Einstein, I mean, he's a physics, person, but he also said that compounding is so surprising, it just doesn't stop. It just keeps on compounding. So don't compartmentalize yourself. Try to pick up good businesses where going forward there will be huge growth. So all of us have seen that people moved from scooter to motorbikes. It was visible. And it was visible not just for 1 month, 2 months, 3 months, but 1 year, 2 year, 5 year, 10 year. On that basis, you could have picked up a motorbike company vis-a-vis a scooter company. We also in front of us how private sector banks opened branches, how they collected customers, how they gave competition to public sector banks. Now that trend was visible not just for 1 month, 2 months, 3 months, but 1 year, 3 year, 5 year, 10 year. You could have picked up as many private sector banks as possible, and that would have created a lot of value. So be a keen observer of what's happening around you. See in which direction economy is moving, where growth is coming, and then try to buy those businesses without compartmentalizing yourself that, look, I can't touch private bank because I am a value investor, or I can't touch a PSU bank because I am a growth investor. Who knows, both can make money for you.
Yeah, that's true. And I don't want to get into, yeah, sure.
Can I?
Yeah, please.
Because this is very big concept, the difference between value investor and growth investor.
Sure.
Basically, I mean, the way it has been now synthesized is that growth is part of value. Right. Okay? And there is no investor who is not a value investor. What is a value investor? Value investor is seeing the difference between the value and price.
Yeah.
I mean, and in no investing, if there is no margin of safety, you can never make money. So, value investor, every investor is value investor. You might term it anything, and growth is part of value.
Okay.
That's how it fits in.
Okay, so just to get this maybe crystal clear, because maybe some of these are potential investors as well. I don't want you to comment on stocks, but I'm just saying, hypothetically, a lot of people now say that look at buying into the metal sector. Even if there is no growth, there is value because some of these stocks are trading at sub book. I'm sure these students, when they go into the investing world, will hear these things, that a company is trading sub price to book, it will probably stay this for 1 year, but then go out and buy it because in 2 years, 3 years time it may go up, so on and so forth. As opposed to that, there are companies like iShare, Page and a few others, which are trading at multiple valuations, wherein the value might not be there, but the growth seems to be there. So that is the bifurcation that I'm trying to give. Will you be able to say?
Yeah, so now you're coming to the investing process.
Yes.
I mean that is of individual guys. Say my investing process is very clear.
Okay.
I don't do anything till I understand that there is a value.
Okay.
So first thing is whether I see value in metal companies. So even say for the assumption I believe that there is a value, and at current prices of 1/10 or 1/20, 1/5 of what it was say 3-4 years back, today prices are. So if I have a bull case for say aluminum demand or steel demand, and if I think that these companies are going to do well, then I'll go and appraise whether these companies are worth it.
Sure.
You know, but I don't think at this juncture
Right.
that commodity companies are good buys.